Novo Nordisk, the Danish pharma giant, is suing the U.S. company Hims & Hers Health over alleged patent infringement. That's after the American telehealth firm launched and then canceled a $49 U.S. copy of Novo's weight loss pill, Wegovy. That followed backlash from the U.S. Food and Drug Administration. Let's get more from Chuck Lieberman, co-founder and chief investment officer at Advisors Capital. Chuck, thanks very much indeed for joining us.
Happy to do it, Andrew.
So it has been an odd situation for quite a while, hasn't it? Companies, including Hims & Hers, have been selling these so-called compounded versions of the drugs.
Right, and they're doing that. They initially did it through a loophole when these GLP-1 drugs were unavailable. There was a shortage, and so that permitted them to sell the drugs. But the shortage has been eliminated because the manufacturers, both Lilly and Novo, have increased production. And so the shortage is gone, and yet they continue to sell these drugs. So I'm surprised that there haven't been more objections from the FDA and from these companies even sooner.
Is it clear that the FDA could shut them down?
Well, they could shut down the production of these drugs or the sale of these drugs.
Right.
And certainly they could do that. And they have every reason to, because otherwise people would get around FDA requirements to have drugs tested and approved by the FDA.
Now, can you clarify, these are the pills, and of course that's been the holy grail of the pharma companies, hasn't it? A pill using these GLP-1 mechanisms.
Yes, that's right. It's this particular battle is over the pill, but the fact of the matter is it really applies to all of the GLP-1 drugs.
Can we turn to the broad market? Of course, the stock market doesn't always follow the economy, but what is your view on the U.S. economy right now?
Well, I have a pretty positive view because economic growth remains quite solid. The inflation numbers have come down slightly, but only slightly. And we have an odd situation where GDP growth is much, much stronger than employment growth. Employment growth is adequate to keep up with population growth, but not any stronger than that. But at the same time, GDP growth is much, much stronger due to all of these gains in productivity. And so that is very, very positive in a number of ways. It elevates living standards and it helps offset wage inflation. So on balance, the economic environment is very positive. And we see that in the form of corporate profits, which have had a very, very good year. So you put all of that together, and that's a very solid foundation for equity prices.
What about the job market? You note that possibly the curbs on immigration and the deportations are affecting it. And of course, some Hispanic people even afraid to go out to work.
Yes, that's right. And so that constrains the supply of labor. If you go back 3-4 years, the U.S. labor force grew at a very rapid clip. And it was predominantly because of open borders. If you look at the composition of labor, of hiring, it was very heavily tilted towards immigrants. Obviously, that has stopped. It started to slow down dramatically in the last 6 months of the Biden administration, then, of course, came to a grinding halt under Trump. So the supply of labor has really been growing only modestly because the current generation of young people entering the labor market is largely offset by baby boomers who are retiring. So net growth of workforce is pretty minimal, and jobs are easily keeping up with that. So that's the underlying oddity about the labor market. But at the same time, GDP growth has been very strong due to productivity gains. So the Fed is in a dilemma trying to figure out whether or not it should pay more attention to the labor market or to inflation and the economy more broadly.
There's a piece in the Wall Street Journal today saying that South Texas, the economy is being weakened by these raids. The Journal went to an empty subdivision that was under construction. And the local builders say, yeah, ICE comes in and it just takes everyone, whether they're legal or not.
Yeah, it's back to the way the policy is implemented. And at the local level, especially when you go to border towns, the impact is going to be accentuated. But I'm looking at the economy on a broader scale. And that's really what drives Fed policy and drives equity valuations. So when I look at that, I still see solid economic growth, even though the pace of job growth has slowed quite a bit.
How are you treating the stock market now? Are there areas that you're deliberately underweighting, for example?
Well, there are areas where it's tougher to make judgments about valuation, and there are other areas where I think the case is much, much easier. There's a joke about a guy with one leg in a tub of hot water and the other leg in a tub of cold water or ice water, and saying that on average they're comfortable.
Yeah.
And we kind of have that in the stock market. We have the technology sector that has exploded to the upside. And the S&P 493 that has been largely ignored, and the valuations there are very, very attractive. Well, we're seeing some rebalancing of the market with the tech sector being a bit softer or not doing quite as well, while the rest of the market catches up. And I think that's where the obvious values are located and where it's safer to invest. That's not to say that the tech sector won't do well. It may well do well. And in fact, we expect continued gains in these companies in terms of their businesses. But stock valuations have run somewhat ahead of that. But in the rest of the economy, valuations are very reasonable and the companies are doing fine.
Do you think that this massive spending on AI data centers and equipment and storage by the internet giants, is that going to end in tears, do you think? Are they overdoing it?
Well, such spending increases typically do end up in tears. But the fact of the matter is there's a revolution in technology taking place. And there's going to continue to be quite a lot of spending on that. Tremendous opportunities for companies really across the board at the micro level. So yes, we're going to continue to see very strong growth. And at some point, yes, chances are good that we will overspend to some degree.
Yes.
But, the economy has a way of catching up to that spending. If you think back to the internet days when we built a tremendous amount of fiber, more fiber than could have been used at the time.
Yes.
So a lot of it went, quote, dark. And yet a couple of years later, demand for fiber went through the roof. And so all of that fiber came back into usage or came into usage.
Yeah.
I think the same thing will be true now with regard to AI and also a lot of the technology.
Thank you very much indeed. Really appreciate it, Chuck. Chuck Lieberman, co-founder and chief investment officer at Advisors Capital.